I think retail is obviously going to be the one affected the most and the most deeply. Um, Talking to a number of property owners, we saw rent collections in April anywhere from 40 to 60% as an average, but there were certain types of properties where there were more local tenants where you might see that number be, uh, closer to 20. Um, I think we'll see an increase in rent collections for May because we're working out a lot of deals with tenants, and it could be reduced rent, and they're going to pay for April and May. But that might be just a momentary bump. We're starting to see a lot more Chapter 11s. Some of this is some of the companies with a large numbers of stores were really slow to come around. Some were really not playing well, but I think a lot of those guys are starting to come to terms and work things out that are equitable. I think that on a positive side, I would say that having these Zoom meetings with our team is really important, and making calls, having our leadership make calls to younger people to really help them through this, because there's a lot of anxiety that won't be discussed on the phone. We're trying to get everybody in the company to make a contribution on the phone, just to say, okay, what are they doing? Share ideas of what's working for you and what are you seeing. And so I'd say from a standpoint of day-to-day brokerage business, I'd say it feels like it's recovering. The number of calls coming into the company has really exploded towards the end of the last week. We actually opened up the office yesterday officially, and we've seen a slight increase of people coming into the office. We're rotating staff 50%. So, we've got Monday, Wednesday, Fridays, Tuesday, Thursday staff, but we're about 50% manned. The rest of the staff is working remotely, and any staff that has a request or any concern about coming in can continue to work remotely all the time. I would tell you though that there's a real there's a faction of the firm that really wants to be back in the office, that enjoys the place, that finds it easier to work here, that just likes the chemistry. Our COO put together an exhaustive kind of plan of having masks and sanitizer and wipes, and she's been stockpiling that to have enough so that people would feel comfortable. We've got a lot of, we've created procedures and, just so that people feel, and we've created a lot of signs around the office just to remind people to keep 6 feet apart. So, we're doing a lot just trying to take those steps to move into the next week and the next week. Oddly enough, and I think this is interesting, is the millennials and the Gen Zs were the very first to not come in the office, to hide, and they're going to be the very last to come back in the office, it feels. And it's nothing about their work ethic. I'd like to really know what it is that it's a product of, but boy, they have more fear and anxiety about it than than any other category of age group I have. I'd say, they're everybody that's been in the office. There's been a half a dozen of us over the last 2 weeks or more, and everybody's over 50. So I don't know what that means. So we're still trying to explore that, and I'd say what's encouraging is even though our younger folks may not come in the office, they are out there showing space, and that's encouraging. In the last 3 weeks, I would say every one of my landlord rep brokers has had appointments to open up space and to show space. So I think that's interesting. So there's a pulse of folks that are kind of looking past all of this, that are looking to expand. we've been identifying, kind of creating a list of tenants that are continually active doing deals. But it's going to be a very different reality. And so that's just, kind of say, looking at what's going on in the brokerage business, what's going on in property management and rent receipt and rent collections. I would say that from a brokerage company standpoint, a lot of people are withholding fees that are due, and I think some of that may be warranted just to make sure that the tenant's going to be there. But we've seen a really strong drop in fees, and in terms of just collections. And collections have always been something that we usually get everything, but whether it's people working remotely and that process is being slowed, or whether certain real estate REITs have furloughed some of their commission staff and it's just moving slower, I don't know the answer, but I would say we're seeing a significant reduction in terms of that income. In terms of sales, property sales, I'd say 70% of the properties we had under contract have the closings have been extended. 25%, I would say, have probably been dropped, and 5% have been closed. We continue to see things that are closing. So I think that the reason for things being dropped would be suspending expansion plans. Some of it could be financing. And, a lot of the kicking the stuff out further in terms of extensions is just that, whether you're into the city to get your plans approved or whatnot, all of that has been stalled out as well. I think one of the dark spots of our industry is CMBS lenders, and with the clients that we work with and with some of the properties that we've got with CMBS loans, those guys are very uncooperative, and they extort fees out of you before they'll talk to you. And it's a part of our industry. We've got to do a better job, trying to make it a more functional process and maybe more accountable. It's just they're not good. So I would say I tried to shed some light on kind of what it looks like on the ground, from our broker's eyes, from our property's eyes, from our company's eyes. I think that our industry, has been in a very evolutionary process, and this has stressed it out even more. And I think in the coming weeks, we'll figure out if it takes a huge toll on companies, big and small. I would say there's an amazing spirit working with most landlords, working with most lenders. Everybody's trying to get through this together, and even the tenants. Overall, I think that spirit of cooperation is there, and that's encouraging. And it's encouraging because it's happened so much faster than I've ever seen it happen in the other times of life that I've been a part of, from the crash of the 80s, which was just totally broken, to the recession. Things seem to be evolving in real time. Questions?
Any questions?
Mike. Hey, Mike, this is Swope. If you had a crystal ball, retail employment base, January 1, 2021, percentage of people still in the industry, what do you think happens?
From a retail restaurateur employer?
No, I'm talking about from a group like you, a group that's in the retail business doing retail deals. What do you think the fallout is? Is it break even? Is it drop 10, 20%? What's going to happen to the people side of it?
You know what? I think this may really this may create a real shift. That we've all been wondering if it's going to come. The velocity of our business has slowed so much in the last 5 years, 10 years. I think, we do half as many new transactions per year as we used to do. So there's something that's going to cause a fallout. We lost a senior broker in the last 2 weeks. Great guy, but his wife owns a retail store. They've got twins, and he got an opportunity for a six-figure job, and that was a necessary move for him. So I think you'll see some of that. I don't know that I could qualify it yet, Jeff. I think that's a real interesting, it's something I'll give thought to. Maybe next time we talk, I'll have a better idea. I'd ask Steve Lieberman if he has any thoughts on that. What do you think, Steve?
Excuse me. I think that, I mean, so far we have not seen it. We've certainly, our activity has dropped consistent with what you just described. Historically, we've seen our greatest activity and our greatest opportunities coming out of periods of disruption. And I think that this is going to certainly qualify as a period of disruption. So we're anticipating on the brokerage team side that we'll pick up a lot of the business that we've lost currently. But we got to get through the near term to accomplish what's ahead in the long term. But I don't expect long term a big, as Mike has said, retail is a very dynamic industry. It always has been, characterized by a lot of change. But as I said before, you know, all the negatives come with positives. So with all the challenges, you get the opportunities. With all the disruption, you're gonna have innovation. People will reinvent themselves. Retailers will reinvent themselves. We're already starting to see how the retailers and the restaurateurs are adapting their business. I expect you will certainly see some fallout, but I don't think it's going to be material at this point. Alan, you might have another perspective.
Yeah, look, I think the issue is how these changing dynamics will define our business opportunities. And so, you know, whereas new store growth is going to slow down dramatically, there'll be fewer retailers and restaurateurs coming out of this. There are other opportunities to drive revenue, and we're seeing them, working with clients now on short term, helping them through their rent relief issues, longer term, helping them reposition their existing portfolio, you know, through lease renewals, blend and extends. We just have to be more creative in finding how to drive that revenue. Those opportunities will be there, both on the on the services side and on the investment side. And so what we're doing now is preparing ourselves internally, you know, to go after those opportunities, both short term and long term.
I'll kind of finish off with two thoughts. I think Steve and Al are spot on. I think in a way, there may be a lot more pain that all of this is just compounding and accelerating, but that's also pushing that evolution to happen more quickly, which I think creates more opportunity. And so, in a way, I look forward to that because this slow, sleepy walk that retail's been in is, you know, I'd like to see it have more momentum to recreate itself, and this is forcing that. The last thing I would say is there's something like 250 to 300 retail brokers in DFW, and a whole lot of them are really good. It's more than any other metropolitan area in the United States. And all of that's a product of this real estate culture that we enjoy that puts all of these, you know, real estate leaders on a call together. It's different than anywhere else in the country. I think it is very likely you'll see people morph into other trades. What Alan was saying is looking for new lines of business. It's very much on our dashboard of looking for, you know, different lines of business, different sources of income. And we're all in the process of figuring that out.
Do you all find yourselves in a position where you're advising smaller tenants more, or do you think you will in terms of reinventing business?
Yes. I mean, there's still so much to unfold with, you know, with how retail and restaurants are going to look, but we are talking to our smaller retail and restaurant stores, helping them figure out from an operation standpoint how their business is going to look different. I mean, it's clear. I think Ray's going to talk about restaurants later, but the restaurant world is changing. We're even seeing on the retail front, retailers talking about reconfiguring their size of their stores, putting more of an emphasis on e-commerce and pickup, whether it's in store or curbside. And so, yeah, we've always been pretty active in working with our retailers, you know, on the operating side of things, as well as the real estate side. But we're seeing an acceleration of those discussions.
What % of the independent restaurants do you think are going to survive?
That's a great question. I mean, I've seen anywhere from, you know, a 20 to 40% attrition or failure rate. That's a huge number.
I was going to say 70% survival, maybe, just a broad number.
Yeah.
Look, I think that the word of the day, certainly in retail, is discovery. And it's all going to be a function of how it plays out throughout the system. And so to the extent that the system works together, that the lenders provide relief. The lenders at the end of the day don't want the properties back. The landlords don't want the spaces back, and the tenants want the spaces. And so to the extent that you get the collaboration that we hope to see and that we are starting to see, I'm hoping and optimistic that number will actually be a little bit less. Unfortunately, the smallest level of restaurateurs and retailers, they just don't have the capital to withstand this. But I think, and you may see a number of these close and reopen. Again, converting a restaurant space, as long as you do it quickly, is a very efficient process. If you take too long, all of a sudden you have all types of issues. So the landlords who got experience understand that. They don't want the vacancy. I think you're going to see short-term relief, whether it's percentage rent or other structures that say, look, let's find a way to sort of carry through this period of time and see if everybody can get back on their feet or not. There's not going to be a rush to put pressure on these retailers and say either pay me or close, because that's a lose-lose situation.
Yeah.
I was just thinking that free rents is not a big enough give if I can't fill the restaurant. So.
Right. And they can't, and 25% isn't going to work. There's all types of issues with the employees. There's all types of issues with separation. There's a lot more questions and answers at this point. But like I said, I think it's too early to make that call.
I think it is clear that particularly on the retail side, a 25% opening is going to be a disaster because you're forcing a retailer to increase their expenses, and at a 25% capacity, they may be in worse shape than if they just stayed closed. I think it may be a different situation for restaurants with, particularly if they're strong on the takeout, but in retail, it will not work.
Well, their employees don't want to come back at this point because they can't. If they're tip based, they can't make enough money to cover what they're making off of unemployment, at least in the near term.